Hello guys, you're welcome back. So in this video, we're going to be talking about the price action strategy. So what is price action? Price action simply means the way and the manner in which prices behave. The analysis behind prices, okay, the way price moves, the way it behaves on the chart. So that's what is known as price action. So for this video, we're going to be talking about 5 rules. Okay, we're going to be talking about identifying key levels. Look out for candlesticks that are losing momentum. Look out for what candlesticks are up to. Don't be in haste, and the big candle. Okay, so for this video, the core strategy is going to be momentum loss through candlestick shapes and sizes. So let's jump right into the chart, and so I explain more of how this works. Okay, so here we are on the chart. So first and foremost, in order for you to identify the price actions, and first of all, you need to identify your key levels. So what are key levels? Your key levels could basically mean your psychological levels. And what does this really mean? There are levels at which prices, they are the zeros, they are the rounded number value levels. Okay, there are levels such as 1600, 1700, prices that ends with zeros or in rounded numbers. They are known as the psychological or the key levels. They can be marked out as a psychological level or key level. So for example, on this chart I already marked out some key levels, like this particular levels. For this level, for example, is a key level. Okay, is a key level. I already marked it out, just to give you a brief example of what I mean. So you can see this level, it's a key level. This green horizontal line, this horizontal line is a key level, is a major key level. This horizontal line is a major key level. You can see the major key levels are marked in green, and we also have some um, tiny horizontal lines like the orange lines. So these horizontal lines are major key levels and psychological levels, which I already marked out. So you can do the same. You can mark out levels with starting from prices with rounded numbers and so on and so forth. So yeah, or prices that ends in zeros. Okay, so now that's one, identifying the key levels. So the next thing we want to talk about is you look out for candlesticks that are losing momentum. So one of the ways in which you can really study, or you can really predict the movements of a price or the change in the direction of the price movement is to look out for candlesticks that are losing momentum. So let's take, for example, on this chart, excuse me, let's take, for example, on this chart, we have a sell. Okay, we have a sell, we have a downward trend that comes from this point, that goes down, down, and down. You can see the long candles, making impulsive moves. But at some point, the price got to this point, and you can see you can see the sizes and shapes of the candle. They are becoming smaller, smaller, smaller. It's just an indication that there might be a change in the direction of the trend. Okay, so you can see the candles are smaller, getting smaller, and you can see what happens next is a push upwards. Okay, so you need to look out for candles sticks that are losing momentum. So this can be identified by noticing candlesticks with smaller shapes and sizes. So let's look at another one. Let's check another one. Let's try to check some other ones. Okay, Okay, let's take for example this. You can see the price came. Okay, let's take for example this point. For example, the price came down, and you can see a little small, a small candle. The candlesticks starts to reduce. This is a reversal candle because this has been a long weak candle, a long bearish candle, and what you have after is a small shaped reversal candle, which is a green. You can see the size. You can see the size reduces until we have something like a doji here, which shows that okay, there has been a final downward movement for the prices. That means the doji appearing here shows this is what we mean by a doji. This this candle here, so it indicates that the market it has exhausted all of its sell opportunities. So what we need to see then is a reversal. So you can see a green candle pushing upwards. You can see. So that's that about that. So the third rule. So let's talk about the third rule. The third rule say look out for candlesticks, what candlesticks are up to. So now talking about our key levels, most of the time why we need to draw our key levels is key levels are points where prices are naturally attracted to. So prices always magnet the key levels. Okay, so basically what you want to do is you want to really understand what the candlesticks are up to. So if you notice a reversal, you also want to if you notice a reversal candle, you also want to confirm if the current price level is at a psychological level or major key level. Okay, just for example, you can see at this point here, there's a long candle, then we can see some reversal candle, and this area, this is a major key level. This green horizontal line indicates that this region is a major key level. So it's a confirmation to us that whenever we see candle with for each time we see candles losing momentum on the major key level, that means it's a confirmation for us to have a change in trend. Okay, just like we have seen here, the prices came down all the way, and you can see the smaller sizes. There's a reversal candle, then this major key level has given us a true confirmation that okay, the price will reverse back upwards because it came down and it came to test this major key level. Okay, so you can see the loss in momentum of the candles. They are becoming tiny until we had a massive push upwards. Okay, so the fourth thing is don't be in haste. So let's take for example you entered a trade from this point, and you notice that um, you know let's take for example you entered a trade at this point, and you are probably scared of the trade going against you or reversing or something. One of the ways in which you can have much more confidence is to actually check all of these things, tick all of these boxes, these confirmations that I've mentioned earlier. And also you need to learn to you need to wait for a reversal candle. That means you need to wait for the close of every candle before you make your decision. Okay, so once you spot a reversal candle, you have to wait for the closure of that candle before you can make your decision. Okay, so that's that about that. So I'll take an example from there. So let's take, for example, you have a sell opportunity here. This is a sell, and this is a reversal candle that goes up. Now, you really want to wait. This is the final. This is the final reversal candle. So you really want to wait for the closure of this candle before you can really place, make your decision. So the best part or the best point to make an entry would be on this candle, on this reversal candle, because this is a red candle and you really want to watch out for it. And okay, so it will be okay for you to take your trade on this candle or on this candle. Okay, so yeah, so that's that about that. So that you can always, it helps you to always plan a proper entry. And the fifth thing is the big candle. So for each time you see a long candle piercing through a major key level or a psychological level, it gives you an insight that there is going to be a continuation of the trend. Okay, so I'll take that again. If you spot a big and long candlestick that pierce through a major key level, it is an indication that the trend will continue. Okay, so don't expect a reversal yet. So I'll take, for example, you can see this particular candle, this particular long candle piercing through our like major key level, then there is a continuation. Okay, so it shows that yeah, there is, the momentum is very very high. So let me look for another example. But even though for every time you spot a long candle, you also need to wait for the closure of that candle to make your decision. Okay, so that will be all for now. Thank you for joining me. I'll see you guys in the next lesson.